Morning everybody, it's Chris here from Serene Education with the Forex Majors and last update for the 27th of September 2011. Hi, I'm just going to go over the Forex Majors this morning, starting with the Euro against US dollar pair on our CTC, count the cash system. So without further ado, it's going to move on to the daily. Always look at the daily time frame to get an idea of what's likely to occur intraday. Well, you can see we've had this extended downtrend, and then over the past week or so we've seen this correlation, this consolidation bandwidth here, where we've seen price pull back slightly and then drop significant, then a slight consolidation yet again, a lot of spinning tops, then further decisive move to the downside, then further indecision going into the last 2 days or so. This is primarily knowing that the G20 are trying to thrash out some sort of deal to try and stem the issues that we're having in Europe in particular. And there's talk of a potential true a deal being put together that's going to sort things out in Eurozone in the tune of roughly around about 2 trillion euros, if I'm not mistaken, about 1.75 trillion pounds sterling. And we saw price kind of pull back on that news yesterday. Long quick to the downside, very indecisive to start with, but then as the the US session continued, we saw price pushing higher. What it's done though is it's now brought us, you can see Asian market has tested the underside of the actual bar support, the body of the price swing or support in this case. A slight touch on the highs here, and we're literally trading slightly higher than the open of last night. Not very much, still very indecisive going into this morning's the close of the Asian session, going into the European session open this morning. Ideally we want to be trading higher than this price support. Otherwise what we're going to do is just see price fail at this level here, give us some sort of bearish indication, and then we could see a further attempt to the downside, which would be our first target, would be ideally the bottom of this swing here at 13,450. So ideally, if we were to see any progression further to the upside, then we need to see price breaking ideally above this price support here. So if we're looking at the candle here, what do we have here? 13,500, 1355. We're looking at 13,5700 or something, thereabouts. 37, yeah, 1357. So above that area today, if we can get above that, or the high of this evening's candle, then definitely we'll see further extensions higher. And then our first port of call would roughly be around the 13,700 mark, a nice psychological round number. And then second attempt or target could be ideally the price swing over here at the 13,8500 mark and change. So first port of call needs to get above this 1357 here at the bottom here. Failure to do so would obviously see price revert to the downside, and because we are extended to the downside negativity wise and the CTC is in our favor, then we should be looking for ultimately further downswings. So let's keep that in mind. If we go to an hourly chart, for example, as I mentioned, the 57, let's keep that, there we go. You can see the highs, swing highs over here dictating price action. Hourly, swing high, swing high, swing high, fantastic. However, we still have that resistance level above us, and as I mentioned, we ideally like to be trading above that in order to definitely give us a signal that we're going to see further extensions higher. Otherwise, what could happen is we could see price just revert, consolidating around that area and just falling back to the downside. And because we are in a negative long-term trend, you can still see we're still trading below the institutional moving average. When we get above that area there, then we smack bang into further consolidation. So it has to do a lot of work in order to get above price. So we'll have to watch it and see definitely if we do get that push either during the course of this week. It'll be interesting to see how it pans out. In particular, there are a lot of resistance levels around the 1355 if you take the bodies into consideration, in 1357, but there is definitely a major resistance here. You can see it's taken us over the best part of the weekend. Well, 4 days already. So yeah, it does need to do something really special to be getting back up there. So bide your time. Look for potentially either a lot of shooting stars or bearish engulfing haramis or morning or an evening star type formation around here to see less indication of upside movement, and then potentially a pullback to the downside again. Or we want to see a bullish engulfing candle, a nice bullish candle, empty one, a lot of momentum behind it, pushing us or giving us an indication that we're looking for further highs on the on price itself. Otherwise, we'll just look for consolidation here, roughly around the 1357, with ultimately an outlook for further downside movement occurring. Next up is sterling. Good old cable. Sterling against US dollar. I notice this massive drop. Very good negative extension to the downside. If you drew your trend line on here, you'd see the rapid pace is going. And now we're testing this upper end of this trend line, for example. Could we see a potential consolidation taking place? If you take the high of this candle here, the bearish candle, and you plot a fib retracement figure, you can see that we're now trading above the 50 on the daily, and we are now heading towards, or we're testing the 61.8 fib level on our daily time frames. So ideally trading above that would definitely give us further. We're going to see that most of our CTC charts intraday are going to be giving us a buying signal, primarily because of this massive bounce to the upside. The news recently, we've seen some downside movement, but sterling seems to be doing pretty well. It's holding its ground as the uncertainties happened. We've had a lot of sell-off, don't get me wrong, because Eurozone, or sterling is quite heavily tied to Eurozone. We do a lot, I think at least 80% all our imports are from Eurozone countries, so we are very reliant on the Eurozone, and if anything had to happen to Eurozone, then obviously it'll be a direct influence on sterling itself. So it tends to trade it quite closely, and the bullish news that we potentially have some sort of some deal on the table has really seen price bounce. That bounce has also taken place on a very strong support and resistance level in the past. Very strong. If I just zoom out, you can see that we're looking at literally 2010, May of last. You can see the massive support area here in late August and early September of last year, and then through the late December period and early January. Very strong support, and also psychologically a nice bounce area. So that's what's occurred, and as long as we stay above that, then obviously we're going to see ideally almost a definite break to the upside. 4 hour, beautiful chart to trade. I love trading 4 hours and hourlies, primarily because they give you such beautiful swings. Look at this, it's fantastic. This is like cable of old. Beautiful, all the moving averages crossing over. The CTC is one in my favor. I'm just looking for breakouts along these ways and putting my stop above the previous swing high. And yeah, she's been absolutely fantastic to trade. And then you can see noticeably after a lot of indecision and consolidation at the 156500 mark, we saw a clear breakout, consolidation under the side, and then a continuation just recently. Now that's slammed straight into that very strong barrier I mentioned, support, which happens to be a very strong daily support. If we had a break below that, then it's goodbye. Cable would definitely be falling off a very large cliff, and there's a lot of space at the downside. So as long as it stays above 13,500, then there could be definitely a chance for further progression. So CTC on the 4 hour, we have 2 of the 4 bits that we need. We are now trading or testing the downtrend, but we're also going to be testing that very strong or a strong price support and resistance level. So we've got to take that in consideration. At 15,6500 there is a prior support and resistance level, and we also got the major trend intraday to deal with. Okay, we all know the cable has been very negative over the past couple of months. Very negative. You could see that on a 4 hour. Most of September and midway through August, it's just been selling drastically. So it needs there needs to be something really bullish in order to take it above that. But if it's trading above the 15,6500, then we're definitely going to be looking for further extensions higher. We have got a consolidation band that we need to get through, so if it breaks above the 1565, then we'll have a 100 pip move to at least the 1575. Break above that, then we have a bit of slight consolidation. So anything above 1582, 83 would be third target. Then we have a nice break, clear break to 1595, at least, and then a slight consolidation above that, which will take us back to roughly the 1600, which is our very strong psychological support and resistance level on a daily, which brings us to the institution moving. So if we do get above 1565, there is 4 potential targets here, definitely. But CTC on our 4 hour is still extension low, so be aware of that. And if we go to an hourly chart and we plot our uptrend swings, the swings highs depicts uptrend. You notice that the CTC is extended blue, moving averages all below us, bar the institutional one, which we need to get above, and as I mentioned, it needs to be the 6500. And if I plot my line there, 65, you can see the institutional moving average there or thereabouts. So it's got to do a lot of work still. It still hasn't got an easy ride. But if it can break above that institutional moving average, then there's more likelihood that we're going to see further extensions higher. Until then, we could be seeing potentially a consolidation area. But as it stands now, the CTC is blue, so we should be looking for opportunities to the upside. Is there enough in this trade now to see further extensions higher? It remains to be seen, because we have a slight swing here at 15600. Get above that, then yeah, we might be able to scalp 20 pips before the consolidation takes place. So trade very tentatively when you see these setups, guys. You've got to be able to make decent amounts of profit. We move to our 15-minute chart. You can see price action just over the past 15 minutes or so. We've had cable break a prior resistance level on this time frame. So going into the Asian market session this morning, we saw a slight sell-off. That sell-off when met the uptrend. Okay, see, I'm putting together a picture here. So swing high, swing high, swing high, swing high, swing high. Price failed to break above resistance going into the last part of the US session against a previous resistance level. Pulled back to the downside. That happened to occur on Asian. Slight consolidation here, roughly around about 45 minutes of consolidation at a support area, which happened to be the uptrend, and we bounced higher since. That bounce higher has taken us above the prior resistance, so notice we had a slight support here. If price can stay above this area here at 1556 during the course of this morning, then we could see potential favorable upside for the remainder of the day. If it fails to do so, then we could see price consolidating with a fair chance of it falling back down again. If it breaks this major intraday time frame for this particular chart, then we could be looking at potential downside moves, and we look at prior support and resistance levels along the way as our potential target makes. Keep it simple, guys. Next up is the US dollar Swiss franc. Ever since we saw the Swiss franc picking its currency, we've seen a massive change in market sentiment for this pair and a huge drastic change to the upside. If just zoom out, you can see that US dollar was in a very extended downtrend on this pair, and it needed to take something very special in order for it to actually change its market sentiment and to see price moving higher. And we've seen that. It's pretty much this massive candle here did take us all by surprise, so we wouldn't have really this 8% move actually happened in 15 minutes, so it would be very difficult to actually catch that. But once it's done that, it's proven its weight and actually punched higher, breaking a lot of support and resistance levels in the past, and most importantly, the institutional moving average. It's gained higher, it's moved slightly higher. It's been pulled back slightly over the last couple of days, primarily because of what's been happening in Europe. In the extension, you can see a lot of wicks, more price action at the bottom end, just depicting slight indecision. Yesterday's trading range in particular, very negative, but it seems to be holding its ground above that area, and it hasn't been able to trade lower than this prior low here. So yesterday, or the prior day support, yesterday's support, and if we can find further support at this 80, what is that, the 0.900 mark, then we could see ultimately another push higher. So if we can stay above here, even though it's giving us these bearish indication, it's still indecisive, taking a breather, but it still happens to be above this prior. It hasn't fallen lower, so if we can stay there, then we could see further extensions higher. So psychologically, let's have a look at our intraday and just plot that 900 mark. Nice round figure, 900 psychologically. See that price is just potting along the top end of that. We see a lot of action on it. So is it a breather? Could we see things happening soon? It remains to be seen. We're seeing a lot of wicks, I must admit, on the daily. More bearish sentiment, but as long as it stays, it's still staying above that 900. So as long as it can stay above 900, we could see it pushing higher. Okay, the moment it breaks below 900, then there seems to be confirmation that there's long wicks that we saw on the daily. I'll just bring this back up again. Are telling us or giving us an indication that we're seeing price really starting to run out of steam. So we are on a consolidation band. You can see quite clearly here we are trading above a consolidation band. So as long as it can stay above 900, then what we're seeing is just a breather. It's just taking a breather before we see a further extension higher. So make a note of that on each time frame that you're trading. So as long as it's staying above it, then psychologically we should be looking at it as a support area. The moment it breaks below that support area, then there's a good indication that we're going to see further swings to the downside. We could be looking at the institution moving average as a potential target for this pair, which brings us back to the 8900 mark. Further extensions lower would take us back to the 8800. Below that, back here to just above the 8670 mark. So you can see I'm just putting these all together because they happen to be strong support and resistance levels in the past on our hourly. So we are getting lower swings. We can see we topped out, yeah, just about roughly around the 91.8, 91.9. The previous attempt at the high was still lower, so we know that price action now. You can see price is starting to dip, and we've had lower swings over the past couple of days. So price is definitely moving lower. CTC is in our favor. However, we have that very strong support area at 900. That's the only thing that's really keeping this from us from not taking the short. Is primarily the support area. If it breaks below there with a nice bearish engulfing to the downside, then we should ultimately be looking at 8900 as our first potential target on this pair to the institution moving average on our hourly, roughly. Okay, so until it's done that, then we're still in a consolidation. Okay, because long term it's still in a consolidation upside move. It's just taking a breather. So don't jump the gun. Got to wait for price to give us the indication, and then we trade that move done by the market. Very, very important. Last pair of the day is US dollar Japanese yen, and here we are starting to see very interesting 76.50, very strong support and resistance level. This happened to be a very extended one, very similar to what happened at 80. And you can see on 80 prior to the breakout early in March, we had Japan earthquake, tsunami, intervention from the government. Then we saw price pretty much failing to trade higher, pull back, and then it sat along this 80 mark for a long period of time. And then we had the bearish breakout, slight consolidation, continuation lower, further indication of intervention. And then we saw it pitching around at 76.50. And then it's broken slightly through. We've had longer wicks, so if you're trading wicks, then we've seen the break of that body trading range. A lot of consolidation further at this level here at the 76.10 mark. More happening at the bottom end of the wick. A lot of wicks to the upside, getting exhaustion. Further indecision yesterday, further trading of them. So very, very indecisive now on the US dollar Japanese yen. If we want to see a clear break lower, it needs to break this area here, this consolidation area. 76.10 or lower, bearish engulfing, something like that over here would definitely signal further downside movement. We have seen the US dollar rally against most other currencies recently. It doesn't seem to be the case with the Japanese yen in this case, so just bide your time on this one. 76.10 still seems to be a support area here long term, and it's trading between these 2 points now, 71.10 and 76.50. There's a 40 odd pip range there, so we definitely need to see a break below that to see further extensions lower. Fail to do that, then we're going to just see it continue to consolidate. So 76.10, make a note of it in your intraday charts, guys. If you are trading this pair, make a note of the prior resistance. So you can see price is now trading below the institution moving average that we know is negative. Okay, we know that. You can see it's been squeezed now. See the highs are getting lower as we've got. If I zoom out, you can see price is really being squeezed to the downside now. Prior 76.50 was a price support and resistance level. Now we see more action taking place below the 76.50, which is a very negative signal. We need to see price trading above 76.50 and ultimately above this consolidation range here at 76.90 at least. Got to be above the institutional moving average to even think about looking for longs. Until then, it's still consolidating to the downside, which is a bearish indication. So be very, very, very aware when trading this pair. Very volatile. You can see the 15-minute chart. Geez, like seismic activity of it. It's crazy. The wicks and this, it's the only beauty with this thing is it tends to move slowly. If you want to be in for long term and you want to be able to trade something, then yen is probably the best thing, but it's very wicky. You can see that. Very, very indecisive. And it's going to trade close to the US. So if things are bad in the US, then we can obviously see things happening in the Japanese yen. But as it stands now, you have to be, the rules are break of 76.10 for definite confirmation further downside movement. So make a note of that. Break above 76.50. Which is here, to see any indication of further upside movement. Until then, it's just consolidating, not worth trading, not worth it. See, when it tries to break higher, yes, you are getting movement here, you might be able to make a pips, but then it's falling down again. If anything, you can see the highs getting lower here as we progressed over the days. So we are seeing consolidation to the downside, so take that into consideration when you're planning this trade. Until then, guys, have a fantastic trading day. Please have a look at the news to see if there's anything that's major going to really move the markets today. G20 summit over and done with. Let's see what happens now going forward. Are they going to implement things? Is it going to take time? How are they going to go about it? What's the latest news? Has the market accepted it? And where do we go from here? So make a note of it. You have to factor all these things into your trading. It does take time, but I can assure you it's all worth it if you just put everything together systematically. Until then, keep it simple. Follow the rules of the CTC if you are trading this particular template. If not, whatever time frame or whatever charts or whatever strategy you're using, please back it up with sound money management. Keep it simple, as I mentioned. I can't keep referring to that. You have to keep it as simple as possible. Don't make it complicated. And enjoy it. And most importantly, only trade when there's a trade. Until then, trade serenely.